Hi, Paul Gerard, back again. Price accounting service video on loan interest deductions. So in the past video, we talked about walking through recording a history of your loan and your borrowing so that you've got the information to assist to fix this problem. So in this video, I want to talk about the fix. Now, it's not perfect. It's not guaranteed. It's not assured. It's got risks. But I'm going to argue when you combine and consider all the factors, you will always be better off by following the guidance and recommendation to fix this the way we're suggesting. Okay. So the first step is the ATO has a concession available which says that if you have a legally enforced and written agreement between the joint borrowers that says, for example, Joe and Mary, Joe is going to own the investment, Joe will claim all the deductions and obviously all the rent, report all the rent, and Mary claims nothing. Okay? So, problem to that is the ATO on their website say that that agreement has to have been in place from day one. Now, I've spoken to so many people and you're going to argue, and look, I get it, but I'm not going to argue back against you because the ATO won't either. They'll just deny the deduction. Okay. The official rule is that you must have entered into that separate legal enforceable written agreement at the time the original loan was made, then each covers each refinance. So you can see the problem. Well, I've encountered people who've got interest history on property, for example, 14 years. They are affected. So how do we fix that? Well, we, together with a very competent lawyer who understands borrowing, tax advice, and also he's a solicitor, our solicitor has developed a tool and resource which is a separately enforceable written loan agreement that covers the ATO expectations. Can it be made now? Ideally, no. However, we consider that because the ATO raised this very concept of a separately enforceable written loan agreement in September of 2025, that it's new. They can't necessarily retrospectively require somebody to have something now that was unknown or not understood back, say, 14 years ago. This agreement does not seek to backdate, because backdating any form of agreement can be and will be construed as fraud in a court. This agreement is very clear that it says, hey, Commissioner, well, it doesn't say, hey, Commissioner, but it says, hey, Commissioner, we're entering into this agreement because it was something we agreed back when Joe bought the property. We always agreed that Joe would be the owner of the property and he would report all the income and he would deduct all the expenses because that's what he did, okay? And it says in the recitals to that agreement, and we're only really putting it in writing now because the ATO told us to in September of 2025. Okay, so that's the substance to that. However, it doesn't necessarily fix everything because it hasn't been tested in a court. It hasn't been tested with the ATO saying, absolutely, I accept that, because the ATO does not give legal advice and it would be in a legal agreement, so therefore legal advice follows. However, we believe it's the strongest and best basis for supporting your deductibility. If you don't have it, 50% of deduction gone, okay? So it's better to have than not have. We're also recommending that taxpayers who are affected, who are our clients, now notice I said who are our clients, obtain and maintain for a period of at least 2 years Audit Shield insurance. So Audit Shield insurance is I'm going to say it's a fairly low cost. You're talking about, for a couple, it's about $250 for a full year. And what it does is it covers you for our costs as tax advisors to represent you and support any audit-related claim. There are some catches to it. You must have been a client and we must have issued the policy and you've paid the premium and so forth. Only if you have the insurance in place before the ATO commences review can you claim, okay? So you can't suddenly realise, oh, I've just received a communication from the ATO in my MyGov account saying, oh, look at my interest deductions. I better go back to Paul and take out that insurance. Sorry, won't cover you. We won't. If we did issue it, we will cancel it when we find out later. You will be losing part of your premium and you won't get a claim value. So don't do that. So we think the Audit Shield insurance is important because not only does it give you our resources for cover of maybe $10,000 or could be more, it also gives you access to legal support. We have lawyers who are happy to represent you and literally argue your point with the ATO, okay? That is absolutely important so that in the event you do have a dispute, they can represent and argue your position legally. The ATO can then make a decision to allow or disallow, okay? So we think the combination of the agreement, the Audit Shield is your best bet. So what I will do in the next video, I want to discuss some frequently asked questions because I know people have got a million of them. I've had it from many clients who have experienced this audit concern. Okay, so in the next video we'll talk about the frequently asked questions. Okay, so look forward to seeing you in that video. Bye for now.